Before Fotis will be starting the webinar, I would like first of all to welcome all of you on behalf of the Trading Pit. My name is Alex. I am a partner officer and an affiliate manager in the Trading Pit. I would like to make a small introduction about Fotis, even though I truly believe all of you after the webinar, you will understand the introduction. It was not really necessary, but Fotis began his career as an investment manager in private banking in Greece. He then worked as a portfolio manager for other asset management firms until he moved in London in 2010 to start working as a prop trader. Fotis improved seriously his trading skills and learned to understand the behavior of buyers and sellers and identify high probability trades. In 2014, Fotis started his own online trading academy, the Fotis Trading Academy, which we are very happy that we are partners together, focusing on FX, global macro trading. Macro trading, sorry. He still continues managing multi-asset portfolios for high net worth clients and collaborates with multi-million-dollar funds. Fotis also invested heavily in new technologies and AI and has developed systematic strategies to help all different kinds of investors. So I really wish to everyone to enjoy the webinar, and Fotis, as we say in Greek, we are all ears. Stage is yours.
Thank you, Alex. Thank you for the introduction and welcome everyone to this webinar. Allow me to share the screen.
Yes.
There you go. Okay, so let me do this. I'm not going to start by saying a lot about myself. I have been in the years for about 20 years now. I have been through all the levels in financial markets, working as a portfolio manager, working as a consultant, proprietary trader, and so on. So let me go straight to the point, why you are here today. As I said, no introduction, straight to the point, because I have a lot of things to share with you. Why you are here? Let's start with this question. You are here because you wish to understand how to become consistently profitable and how to generate an extra income. You wish to build wealth. This is where I'm going to focus. Before I start this, I was considering preparing a PowerPoint with slides, making it nice and fancy. Then I thought, no, who would like to learn all the tactics so you can go on Monday and applying what you have learned today? Just say yes on the chat so I can see you can hear me and you are interested to find out more. And if you have any questions at any stage, don't wait, just type the question, please, and I will take a pause, read it, and answer it. So who would like to learn techniques and tactics that you can apply straight away and make a difference in your overall performance? This is the purpose of this webinar today. I'm going to show you exactly how it is supposed to happen at a professional level in a prop trading firm. But before that, I wish to explain how it used to be in the past. I'll just spend 2 minutes on this, and then you will be able to see the advancements that have happened the last 30 years and where we are today. Why retail traders lose money? Okay, Justin says the chat is disabled. No, it is not. Can everyone hear me? Please let me know. Just say yes if you can, to make sure that I'm not talking to myself. Can you hear me?
Yes, of course,
yes?
Of course.
Excellent. Thank you so much. Fantastic. Yes, okay, Justin, fantastic. So let me show you what happened in the past. Guys and ladies, in the 80s, it was only us humans. We were competing against each other. This is the thing. We had traders competing with other traders. In the 80s, something came up that was called a moving average, Bollinger Bands, MACDs, and it was supposed to be revolutionary. So I'm not going to discuss, don't worry, moving averages, stochastic, and MACDs. Then we go to the 90s, and in the 90s, we had a big boom in financial markets. I'm going to share my screen. So this is, by the way, my website, Fotis Trading Academy, where I show traders how to trade profitably under any market condition. So let me show you this simple chart. Do you recognize this? This is just stochastic, MACDs, moving averages, Bollinger Bands, and so on. It's just a Euro USD daily chart. So what happened in the 90s, because we had very strong trends in the markets. Do you remember the boom in the dot-com bubble in United States, NASDAQ, the S&P, Dow Jones? We had amazing trends. So if you were going to use a simple trend following system, that was working miracles. But again, please remember, it was humans competing against other humans. It was easy to say, oh, okay, I'm going to buy when we have a breakout of a moving average and the MACD is positive. And simple rules like this were sufficient. But as we were approaching the year 2000, the new millennium, things were changing. What happened? Now we have more players and new players hitting the markets. We have algos. The algos are buying and selling within milliseconds. We as humans, we are not capable at compete at this speed. So we have algorithms. We have extremely deep liquidity. We have an expansion of the markets. You have retail, you have institutionals, all competing on the same marketplace. And again, as I said, the most important thing is the development of the algos, and we don't have floor traders anymore. In the past, let me do this. Do you remember this? Perhaps you have seen this in a documentary, in a movie. What was happening on the floor? You had the floor traders screaming the orders, buying and selling for behalf of the clients and doing some market making themselves. But it's not happening anymore. Everything became electronically. Everything is done electronically. So you can see, I'm just telling you very quickly what changed the last 30, 40 years. So we come to today. How can you compete in the markets today? What has changed? So as I said, we don't have floor traders anymore. We don't have humans competing against other humans. We have crazy liquidity in the markets. We have algos, and we have players that compete against each other for different reasons. You have mutual funds, you have hedge funds, you have market neutral guys, those that are doing arbitrage, you have speculators. When you see an order buying or selling, it can be for any reason. I'm saying this because in the past you could see some volume in the markets flowing into the markets, and you knew that is a good sign, right? Well, this is not true anymore. You don't know why they are buying something. Maybe they are hedging their position. Maybe they are an algo, just trading for milliseconds within a very small space. It can be anything. So let's now discuss how you make money as a prop trader. So the first thing you need to do, because this is a more complex environment, you need to be able to find your identity. What are you doing, guys? Are you day trading? Are you swing trading? You need to be very specific about what you are doing. If you wish to be a prop trader, you wish to act and trade like a prop trader. Prop traders, just like these guys here that you see on the screen, you need to be profitable for short time frames. You need to make money daily, consistently. Forget the big moves. You cannot be a prop trader and say, oh, well, I see this big move in the S&P, I'm going for a 500 points move. This is not happening. When you are not a prop trader, you are something else. Why am I saying this? To avoid confusion. You need to be able to have a very specific plan and know what you are doing every single day. If you are a macro trader, you are trading macro. If you are a prop trader, then it's a completely different mentality. If you are a prop trader, which is the topic of our webinar today, you go into the markets and you try to make small profits every day. And over time, you wish to do this with more and more volume. You don't want to have big drawdowns, 1-2% maximum, no more than this. You wish to be profitable every day, and at the end, it accumulates. That's prop trading. If you have other experiences, if you trade it differently, let me know in the chat. So let me see if there are any questions. No, the chat is not disabled. I can see everything. So please feel free to ask, and don't worry, there are no wrong questions. We are all learning here. So before I tell you what I do, let me show you something that I think is important, because I wish to be very honest and upfront with you. Before I do this, I took the challenge. I asked Trading Pit, and then I will tell you a little bit later about Trading Pit. I said I want to take the challenge because I want to see what you are going through when you have to take the challenge. Is it easy? Is it something that can happen realistically? I was given 60 days to make 3,000 on a 250,000 account. These are my results. I passed the test in 17 days. I didn't trade the last, I think the first week, I wasn't trading at all. So this is from the first level. I passed this. You can see here the account metrics. I was only trading the Boond. I was going for small profits every day, and it accumulates, you know, very small drawdowns. This is the other thing, what I have been telling you. When you are prop trading, you must avoid big drawdowns. You are not macro trading, you are not swing trading, you are prop trading. So you have to behave like this. And now I am at the other phase. So again, let me show you. I have been trading only 4 days. I started on Tuesday. I'm up 642 euros, and I continue with the challenge. So this is very realistic. It can happen, okay? You can do it. You can make small amounts of money every day, and over time, this is accumulating, and you can potentially do this with more and more volume. So how am I doing this? Okay, nice question from Stanley. What advice do you have for swing traders trading for prop firms? Stanley, this is a brilliant question, and thank you. I'm going to answer this straight away. Let me show you this. Let me begin by telling you what you don't do at a prop firm. You cannot go ahead and do something like this, okay? You cannot start creating systematic rules. So I'm going to buy when the moving average is breaking to the upside, the stochastic, the MACD. Then you look, I'm not saying it's a bad thing. If you are making money, that's fantastic, but you are not prop trading. You look more like a CTA. This is another thing, okay? This is what I wish to clarify. How, let's answer this question. How were floor traders in the past making money? These guys, how were they making money? They were using no analysis, no technical analysis, I mean, no indicators. They were looking what others are doing. This is the secret, Stanley. No matter what you do, use any method you like, it doesn't matter. But you need to be able to understand what the others are doing. You need to be able to understand the relationship between buyers against the sellers, who is in control. So these guys on the floor, they could see if some big orders are hitting the markets, if there is a big whale, as they say it, sending a big order in the market. And they were front runners. They were able to take advantage of the information they were getting, and they were making money consistently every day. Why? Because they could recognize the flows. Can we do this today? Potentially, yes. So let me show you how it is done at a professional level. Needless to say, if you try to do it alone with this kind of indicators, again, it is not wrong, but I do not think you will be consistently profitable over the long run. Why? Because you are putting yourself in a binary dilemma. Should I, let me correct my grammar. Shall I buy or shall I sell? This is a binary event, buy or sell. And there is another problem. How do you create trading rules? So if you look here at this chart, you can start by saying, if the moving average is doing this, and if the other moving average is doing that, and if the stochastic is doing this, and if the MACD is doing that. So this is based on Boolean algebra. So you can see we have many if statements, if and or, and so on. But that's confusing. Can you imagine when we have a situation that the market is moving fast and you have 6, 7, 8, 10 variables, you have 10 indicators on your chart? How are you going to make a decision? A good chess player can see 10, 15, 20 moves ahead. Do you know, you and I, how many moves we can see ahead? 3, 4 moves at the best. That's my point. When you have indicators like this, unless you are an amazing programmer and you can write code, it is very difficult. Who is in control here? The buyers or the sellers? What shall I do next? Buy or sell? So you see, it's completely discretionary. I can ask each and every one of you, but I can get a different answer. So what is happening is this, and this is something that I'm also explaining inside my courses. I'm going just to bring up the paint function on Windows to quickly paint something. So what is happening with the moves, with the price moves? Let me get a pencil. So this is what is happening with the moves. And I think, Stanley, I will start answering your question. We have a move. Let's say the market is moving up. It moves up, it stops here at some point for any reason. It consolidates, okay, up and down, and then either continues or we have a reversal. This is the way that the market is moving. You keep seeing the same pattern again and again and again. With candlesticks, with traditional charting, you cannot see this. This is why we are using, let me choose another profile. I have prepared something for you. You need to be able to see the move. So I'm going to use histogram. So this is the euro, for example, and then I will move to futures to show you how this is done. Trading Pit has been extremely generous by offering these tools. What I show you here, you can go ahead and do it with the Trading Pit platform. Instead of looking at the price action horizontally, we see this vertically. So this is a profile chart. Each profile is 1 day. So what am I doing here? So let me start merging this area here. So here I have merged a few days together. What can you see? This is a distribution for maps. Do you remember this from your high school days? If I go back to my drawing board, do you remember this? The normal distribution, and somewhere here we have the mean, symbol M, and here we have -2 standard deviations, and here we have +2 standard deviations. I'm trying to do business. A professional prop trader is doing business at the edges, here and here. We are not doing business in the middle. Why? It can go in either direction. It's 50-50 chances. But what are the chances that it will mean revert when we do business from the edges? It's more than 70%. We have the chances in our favor, but not in times when the market is trending. I will explain this. So here the euro, what it is doing. Do you think it is random that it stopped here? We have a value area high. Value area is the area where 70% of volumes are taking place. It hits the value area high, rotates back down. Point of control, this is the point with the highest volume. And you see the sellers are not active anymore. You see very thin volumes. So what advice do you have for swing traders? Is use swing trading, use your Fibonacci, your support and resistance, but you will greatly improve your performance and your accuracy if you are able to swing trade at the right levels. You need to be able, you should be able to identify where the value is, because otherwise you will see in swing trading some support and resistances work, some others do not, and you start thinking, when, for example, shall I take the 50% Fibonacci resistance, and which time shall I ignore this? Firstly, you need to understand the structure of the market. Is it trending, or is it just rotating up and down inside a range? So this is what we do, understand the behavior of buyers versus sellers and who is in control. Because let me ask you, at the highs of the distribution, remember what I told you about the -2 +2 standard deviations. Who is in control here at the highs? The sellers. They rotate back down. Who has the upper hand at the bottom of the value? The buyers. So you see, I have the maths, I have the statistics in my favor. So this is at a very simple level, and let's go now to the trading pit platform. We can do the same with the Boond Futures. This is what I'm doing every day. I love the Boond Futures. In general, I prefer fixed income. It can be the Boond, it can be the US treasuries, because the more liquid, the more sophisticated the market, the better it behaves at the value areas. If you have a market that has thin volumes, take for example the DAX. The DAX is quite expensive. It's 25 euros a point, and it has much less volume than the S&P, for example. The heavier the volume, the better the accuracy of your areas. So what am I doing here? How do I start? And I want to show you something that you can go and put in practice straight away. Let me get rid of this for a second. I will bring this up later. How do I begin? I begin with a chart like this, the market profile. So I have the market profile on the trading pit chart, and I have overlaid a 10-tick range bar of the Boond. Do you notice something? Value area high, back down at the point of control. Buyers step in. I can see this with the delta. Down here, this is the volume weighted average price, the VWAP. So we are not randomly selecting the areas where we are doing business. We do not have a system with moving averages and MACDs and so on, and we just take signals all the time. We will take a signal when we are at the right area. The cornerstone of your success is picking the right area. Value area high, value area low, point of control, VWAP. I know in advance where I'm doing business, and this is the way I treat this as a business. I'm a businessman. I'm not a trader. I'm going to give them my liquidity, and I do this for money. I want to make money. Where shall I give my liquidity? Value area high, sell. Here at the bottom, buy, until it stops working. I'm able also to recognize the order flow. Sometimes it gets out, yes, and I'm able to recognize this. Take, for example, today, what happened? I will show you on another chart. This morning, I was selling around 51. I took profits at 41. I hit my target of 10 pips per day, and I was out. In 5 minutes, I was done. But what has happened? It moved back inside value. It rotated all the way at the bottom. This is random, you think? No, this is the value area low. This is a very significant point. The buyers stepped in again. They pushed it higher. But another important thing that I forgot to mention is that you should be able to understand the narrative. Why was I willing to sell the Boond today? Why was I willing to sell the Boond? It was because of comments by ECB officials. We had the ECB yesterday. They are communicating that they have to fight inflation. They are going to raise rates. Okay, so when we raise rates, what happens? The opposite moves happens in bond prices. So you see here, yields go up. The yields go up. So bonds are coming down. They have a reverse relationship. So I know in advance in which areas I'm going to do business. Down here, I wasn't a buyer, to be fair, because I have a negative outlook on the Boond. But right here, when we hit the standard deviation, okay, that was an area for me to sell. I saw the delta, it's negative. Can you see? Negative delta This means that the sellers are outnumbering the buyers. Sell. This is a big move from the 20s. It moved down. That's close a 30, 40 point move. That's 10 euros a point. That's 400 euros profit per contract. This is significant. So what should you pick from this? That before we start, we don't trade randomly. We pick the areas that we are doing business beforehand. And how we do this? We use professional tools that is available by Trading Pit. And we are looking at the structure of the markets, value areas, VWAPs, standard deviations. You need to train yourself and get mentored, into identifying these areas. The other thing I wanted to show you is this, something that you don't see in candlesticks. I can see inside the candlestick. So for example, this is a 5-minute bar, and I can see if the buyers or the sellers are having the upper hand. For example, if I scroll back a little bit in the areas that I showed you before, so this is the 20s area that I showed you. As soon as I saw this, can you see the red? This 0 means that the buyers are not interested anymore. This is a failed auction. And suddenly I have 243 contracts hitting the market, 430. I have aggressive selling here. So this is where I join the flow. Sell. This is a very good level, and I have the flow in my favor. It went from 20s without any pressure, boom, straight down, and I can see the orders, I can see the flow. It went all the way down. That's a 30-point move. That's big. And over here, down here, again, is it a fluke? No. Value area low. Look, the buyers appeared here, and I can see them. I can see the buyers. Do you understand now the difference why in prop trading firms they make money while retail traders are losing? Because we can see information like this. And right now, of course, it's not so simple, because you need someone to train you, to mentor you on this, to recognize the flow, to be able to say who is in control, the buyers or the sellers. But we can have this information. And as I said, Trading Pit has been very generous offering these tools. In the past, we had to spend hundreds of dollars every month. We were paying this to have access to these kind of tools. But this is helping because we can see the flow. We can see if the buyers or the sellers are hitting the market. Then the other thing I wish to tell you is about psychology. This is extremely important. You need to have a plan. I'm sure you must have heard this 1,000 times, right? Have a plan, trade the plan. But let me tell you, what plan is this? If you have a plan with moving averages and MACDs and stochastics, you are humans. You cannot have 10, 15 different rules and expect to obey them every single day. You need a different kind of plan. A plan like this, but you can recognize the buyers against the sellers. So this is very important. You need to decide, who are you? Are you a swing trader, a day trader, a prop trader? The reason I'm consistently profitable is because I have a specific plan every day. For example, I hit 10 points, I'm out. 10 points per contract is 100 euros. Then it's up to you, depending on your leverage, how much contracts you are going to use. Could be 2 contracts, 10, 30, 50, 100. It's up to you. It depends on your balance. The other thing that I'm doing, so I'm having a specific target each day. I hit the target, I'm out. I don't care no matter what happens. I will rarely trade for the rest of the day when I hit my target. So every day I get in, I make my 10 points, for example, and I am out. I'm not trading when I'm trading the Boond, which is the German bond. I'm not trading in the US session. I'm too tired. The US session is more volatile and more sentimental. When you trade during European time, the Boond, we have a move towards the fair value. It happens every morning. Similarly, you can do something with the US Treasury, right? Trade the US future at the US Open. The first, usually couple of hours, are the best because the open of the day very frequently could be the high or the low of the day, and you can capture the whole move. So that's the plan I'm talking about. Let me take a pause and answer the question. Okay, Stanley says, thanks for the brilliant answer so far. Can I hear? Yes, Stanley, of course. Send me an email at Fotis Trading Academy. Of course. Stanley, I will tell you, Stanley says he needs mentoring for polishing up my skills. Guys, I will be brutally honest with you. My first year at the prop firm in London, I was losing money. I wasn't making it. So I was going to trade during the day, and then in the evening, I was working in the marketing department of McLaren. It wasn't enough. It's very difficult to make money in the first year. But do you know how I started learning? It wasn't what I learned at the university. I have 3-4 degrees, it doesn't matter. It doesn't matter if you have the best indicators. You need someone who is doing this already and is successful to show you. The reason I'm mentioning this is why I wanted you to see my results. And I showed you what I did in phase 1 and now in phase 2. Because these days on the internet, everyone claims that they make money and you can live a good life and retire into the sunset with a Ferrari in 1 year. This is not realistic. What I can guarantee is that I can show you how to make 10, 20 points every day in, day out, no matter what instrument. But you have to choose the most liquid instrument. Is it the treasuries, the Boond? It doesn't matter. The logic is the same. Let's open a chat and show you this. Let's use the treasuries to show you, but the logic is the same. Or the S&P 500. Let's do the S&P ES because it's extremely liquid. Okay, ES, front month. Thank you very much. So this is the S&P. The S&P has been moving up. Let me apply. So now my mouse is not working. Now apply template, cluster. So 5 minutes, 1 month, just wait a few seconds until everything loads. Okay, it is loading. I should have done it before. Okay, there you go. You can change this. You don't need to use 5-minute candles. You can use 1 minute, or you can use range bars. It doesn't matter. But guys, let me emphasize this. Do you realize the power of making, or in the case of the S&P, $50 a day, just $50, but consistently every day? If you can do it every day, $50, day in, day out, you can start with 1 contract. Then you will move to 2, 3, 4, 5. At some point, you will be using 10 contracts and you will be making $500 a day. You can do 500 contracts. You see my point? Do you see how beautiful this is? Look, here in this area, what do you see? Do you notice something? Who would like to tell me what have we got here? What is this? Let's see who has got the right answer. Yes, of course. Punit, are you talking about the cluster chart? This one? Or the one with the market profile and the VWAPs? Here we have a value area high. So it's not random. It's not a fluke that the resistance is working here. And how do you recognize this is a top? We have a failed auction, as we call it in auction market theory. Look, 0. That's the first sign. But the buyers are tired. The buyers are not interested to push this higher. Whoever is buying here is trapped. And suddenly, what do I see? Okay, the delta is changing. I see the negative delta here. Okay, I go in with the flow. So let's say I sell at 40. Okay, I can't see even with my glasses. At 40, 4,140, it goes to 39, 38. Guys, that's $50, $100 in seconds. I mean, I take it. Thank you very much. See you tomorrow. That's how you do it. I am not randomly trading across the chart. I wait for the right area and then paying attention to the flow. What is happening with the flow? It rotates down. Can you see the distribution here? On my right, it rotates down. And let me do this. The other thing I want to tell you, I'm going to minimize this so you can see something. Do you remember this ugly chart that I draw for you? Look, we are here at the highs, it rotates back down. When you see, we call this peak and valleys. We have peaks. This is also a very important point of control. This is where the highest volume is taking place. This is where the buyers and the sellers are coming together and we execute the most volumes. Also, this point is important. This valley over here, this is an important point of support. So it rotated from the highs back down. As I said here, you could have made close to 8 points for one contract. That's close to $400, just one contract. Maybe you can do 5 contracts, right? That's close to, I don't know, $1,500, $200 very easily within a few minutes. Just wait for the right area and then strike. So we have a question. Of course, guys, now this is a 1-hour webinar. There are more to this, right? I'm paying attention to the cumulative delta at the bottom, at the delta of each bar. I'm looking at specific things. It's simple, but not easy. How do I create the chart? Okay, let me open a new chart so I show you. This is for, I hope I'm pronouncing your name correctly. Panit, sorry. So let me use the 10-year treasury. ZN is the symbol, front month. So let's say you have this chart, right? 1 minute chart. Let me do 20 days. And let me do, let's say 15 minutes. Okay. How am I creating a profile chart? Do you see this symbol over here, top right? Like a magnifying glass. Click this. And then this is appearing at the bottom. It says cluster, custom profile, step profile, left, right profile, time statistics, and so on. If you wish a cluster with the volumes to see the bid and the ask, you click cluster. In order to recognize where is the value area, you can also do custom profile, and you can choose, for example, this week, and automatically it creates a market profile for this week. So when this week begins, what do I see? That very quickly it moves back inside the value. This is a high probability trade. This is a typical trade. You are supposed to buy this with a stop below, and you are almost guaranteed that it will rotate all the way to the other side of value. Do you see where it pauses? At the value area high of the previous week. Then it continues. How do you know if you are a trend follower, Stanley? How do you know that it's going to be a trending market? Because it consolidates outside the value and then it attempts to break above. That's another high probability trade. You know, it's very likely that this is going to become an initiative move, as we call it, a strong trend. So this is the way we do it. If you wish the cluster, you click cluster, and you just choose here. You wish to choose imbalance, enabled. You see, and this appears, and then you can go inside the settings and make all the arrangements you want. You can see no matter what instrument I show you, the logic is exactly the same. I can see the buyers and the sellers here. For example, when I see something like this, I just hit the button, sell, take 1 or 2 points, and I'm out. Let me emphasize this again. When you are prop trading, don't try to go for the home run. Who likes baseball? Who knows Babe Ruth? Babe Ruth a legendary baseball player. He has the world record for the most home runs. But do you know what other record he holds? For the most failed attempts. You don't want to be this guy. You want to be the guy that is hitting the ball. That's it. Don't try to hit a home run. This is prop trading. Go in, make a point, 2 points, and get out. If you are a swing trader, you need to adjust your plan. If you are a macro trader, you need to make adjustments. But it is important to be able to explain your strategy and do not change your mind every time you lose to say, oh, perhaps I should do this, or perhaps I should do that, or this method is good, that method. Do what you have to do, practice. This is the way trading pit is fantastic, because without risking your own money, you can spend 200, 300 bucks and you can get a trading account and you have all these tools. This is fantastic, but it will mean not much unless you seriously practice and you try to learn as much as possible. When I say learn as much as possible, I think it comes down to understand yourself and who you are. For example, do you have a day job? Are you working during the day and you can't be in front of the screens? Then you need to make adjustments. Perhaps you should be more of a macro trader. You do have time. You can be in front of a chart 6-8 hours. Then okay, you can look at shorter time frames. Do you like to go for bigger profits? Do you have the patience? Or are you a nervous person like me? So you want to go in for small profits with big volume, take the money and run like I do. Understand yourself, know yourself, consider what are your strengths and weaknesses, and adjust your strategy. Another thing I wish to show you here, I can click on right profile, and on my right, I can have, for example, the previous week's profile. Let me click enabled. So last week's profile, let me zoom out so you can see this better. I want you to see the distribution. You see point of control. This is a value area high. Can you see where the bond stopped? This is a value area high. So you see the support and resistances are not random. They do not happen just like this. Great support, value area high, it stopped. Let's see what happens. I want to show you some, well, I'm not going to say mistakes, some weaknesses of mine. And these are things you also need to consider as a prop trader. A prop trader is like an elite athlete. When you have reached a level like myself that I'm consistently profitable, I do make money, and I need to push it higher. I need to make more. I need to take it to another level. Then it's all about psychology. It's all about what you say to yourself. For example, let me just minimize this and show you something. Let me also minimize this. Let me put this on the other screen. Sorry. I will be with you in a minute. I could see opportunities yesterday, and I hit my profit target in the morning, and then I could see opportunities twice here. I could have been up €1,000 within a few minutes, but because I have hit my daily target and because it was ECB day, I didn't want to do it. So maybe you can say I'm disciplined, but this is something I'm battling as, on a psychological level. Do I pull the trigger after I have hit my target? These are the things. I just wanted to give you an example that after a certain level, it's you and yourself. You are battling with your ego and with yourself. I didn't pull the trigger, even if I could see the opportunities, because my plan says do not trade the US. Because do you know how many times I have burned myself, and from a profitable day I had a bad day, and then I'm tired to try to make up for the mess I have created. So no, I decided not to pull the trigger. Perhaps this is something that, you know, I should try to improve in the future. You always improve. You always have room to improve. So questions. Okay, Sheikh says, what platform is that? Yes, these tools are available from Trading Pit. When you do the futures challenge, this platform is available, the Quant Tower, and you can have access to this and all these tools that you see. Yes. Yes, correct. You can use these tools. These tools are coming available when you do the futures challenge. I haven't paid for anything extra, so this is coming as part of the challenge. So the deltas, the market profile, the VWAP, all of that. It's coming with the program. The important thing is, do you know how to use this? This is the thing. But again, as I said, this is why Trading Pit is brilliant, because it allows you with a very small cost to practice just like a professional. This is very good. And in very short time, you can improve your skills and you have a realistic opportunity to get trading capital. Because this is another thing. Do you know how much I was paying in London every month? I had to pay £1,600 every month for the desk. So I had to pay for the platform, I had to pay for the software, for the desk, everything. £1,600 every month, besides my rent and everything else, my food and so on. But here you get all this for free. So you get professional level software, but you know they're using this at a hedge fund level. You have the opportunity to get a trading account for a fraction of the cost. And you can do this from the safety and comfort of your own home. So I'm going to take a pause to see if you have more questions. Just let me know. Any questions? I don't know, Alex, if you wish to add something that you wish me to bring up. I will draw some conclusions, what you should learn from today. Number one, if you are a prop trader, trade like a prop trader. Understand who you are. Macro trading is different, swing trading is different, day trading is different, and so on. Number two, you need to use the right tools. Okay, you can't rely exclusively on candlesticks. There's nothing wrong with candlesticks or moving averages and so on, but it's not enough. So when I go, let's say, to war with a nuclear weapon, you are throwing stones. That's the analogy I can use. Third, you should be able to recognize who is in control, the buyers on the sellers, and identify the areas that you should be doing business. Let me ask you, who is in control here? The buyers or the sellers? What shall I do, buy or sell? No one. I'm not touching this. You know why? We are right here in the middle. I'm in the middle of a distribution. I don't care. Let them do whatever they want to do. But look what happens when you do business from the edges. Sell, buy. You see my point. Sell here twice. Learn to identify the right areas. This is the other thing. Have an open mind, and what I like to say to my students, live in a universe of unlimited possibilities. Don't say, oh, this should not happen. This is not going to happen. You know, the most expensive words in English is should, would, could, and so on. Anything can happen. Anything. This is why I'm not trading the Boond in the US session, because I have freaked out in the past. Sheikhs, yes, correct. Part of the course, what I'm doing at the Fotis Trading Academy, it is extremely important to understand the narrative. Don't trade price action alone. Be aware of what is happening. For example, Sheikh, in this case, what is everyone else thinking? What is happening in the markets? What they are saying on CNBC, on Bloomberg, for example. I think I wanted to show you something. Oh, there you go. I just wanted to give you an example. Facebook, Amazon, Apple, Netflix, Google, Tesla, you name it. Charts like this and articles like this are hitting the markets more and more and more every day. What do you think this is doing at a sentiment level? This is why I told you, you need to be aware of what is happening, what is going on in the markets, where are we on the cycle, understand the global macro cycle, and then everything else will be easier. This morning, I was selling the Boond because of comments from ECB and what they said yesterday. It was quite easy because they said clearly what they wish to do. When it comes to equities, I showed you earlier the S&P, I wish to sell every time it hits a resistance. Why? Because it's more likely we are going to have a negative surprise. That's why. So before I even look at the chart, I have an understanding about what I wish to do. The other thing that you need to keep in mind is that you need to be humble. Do not try to hit a home run from day one. We go for small profits every day, and gradually we are increasing the volumes. I'm not trying to make a 50-point move. I'm going for a 10-point move, a 20-point move if I'm lucky. That's it. I'm in, I'm out very quickly. If I use more volume, if I use more lots, if I start using 50, 60 lots as I progress in the challenge, I might go for smaller points. I might close most of it at the first 5 points. Take the money, get out. But with 20 contracts, if I go for 5 points, that's €1,000 every day. So Alex, I don't know if you would like to add something that we should mention about the trading pit, the challenge. I wanted to be, the first thing that I asked is, let me do the challenge, which I did in 17 days. The important thing is the drawdown, guys, very small drawdown. Let me show you another thing. I want to show you, it is extremely important to keep a journal. This is something that 99% will not do, but it is extremely important to see your behavior, how you are reacting. So this is a professional level journal. Let me do this, bring this up. And I just want to show you something. So the first day I messed up, I was a complete idiot. But then look after this. Small profits, small profits. I go for small, let me magnify this so you can see. Look, keep the losses small and then look at the frequency of the profits. You see? And we come to today, so this is happening the last few days. I started on Tuesday, the next level. And it accumulates. I just want to show you 70% success. This is where I wish to improve. This is why I'm saying keep a journal. The equity curve is smooth. I'm not having big drawdowns. I'm not moving below my equity curve, the 20-day moving average of the equity curve. Now, if I combine challenge 1 and challenge 2, I'm at 3,550 within what, less than 20 days? And I'm increasing this, I'm building this, okay? That's how we do it. I'm not going for a home run. Small profits every day, and it accumulates. And then from 2 contracts, we will move to 4, to 6, to 10, to 50, and so on. Look at the win rate. Look at the payoff ratio. It's close to 100 trades. This is a significant sample. It has a positive expectancy and so on. So I hope you took a glimpse into this. So this is what I also teach at the mentoring, but we provide at Fotis Trading Academy. And I'm I'm collaborating now very closely with Trading Pit, and I think we are going to have more and more surprises for you in the future. If you can understand the behavior of buyers and sellers, and if you can understand the macro, then you can trade anything, whether it is stocks, futures, forex, you name it. It doesn't matter. So Alex, I think we have approached the end of this. I don't know if you would like to add something. I'm going to wait for a few questions. If anyone wishes to ask something.
Great. I was about to say the same. If everybody has questions, from my side, Fotis, it was indeed a very enjoyable webinar, like with a very clear point and a very nice understanding, and not only about the trading per se, I would say, but of sharing your experiences psychology-wise as a trader. Because in order for us to succeed, we need to imitate people that they walk the same path before us. So this is equally important with the technical part. So from my side, thank you very much. And if somebody has questions, we can stay another 2-3 minutes online in order to answer any questions and to go from there.
So people were asking Alex, so this is the charting platform is part of the Futures Challenge. It's offered free. You don't have to pay any other fees. This is important because I used to pay, again, this is haunting me, £1,600 every month. Besides my rent, besides everything. So it's really amazing. It is very generous that you are able to offer these platforms, these professional level platforms to traders. So let's check some questions here.
Yes, and actually this is the goal and this is the target in a short time from now, to be able to have under the umbrella of the trading pit, to be able to have every possible financial instrument that you can actually trade with the top qualities of platforms, of course. So people, they have our contact details, so any questions, more than welcome. Any questions for you on the chat, Foti?
No, this is the Quant Tower.
The Quant Tower.
We have a question, what platform is it? This
Yeah.
is the Quant Tower, powered by Trading Pit, by Rhythmic. All these tools are coming together with the platform. The challenge, I have to say, at the beginning, I thought I didn't know if the time limit is enough, if the drawdown is too small, but everything, it is feasible. If you have a clear target, specific target every day, you can make it. And then as you progress, the limits, of course, just like any other prop firm, you know, there are firms that are much more tough.
Thank you, Punit. Thank you, Punit.
Yeah.
Yeah, sorry.
No worries. I
Yeah,
was going to say that they are much more, when it comes to the rules they have, they are extremely strict. I'm aware, I'm not going to say names, hedge funds in London. Doesn't matter if you trade, 10 years with them, you are down 5%, you are out, just like this. Doesn't matter if you have made money in the past. So this is very realistic, very generous. So, and it is a good opportunity for someone to generate an extra income.
Yeah. And building up skills along the way, yeah, because Foti, allow me to say, you know better than me, but in the trading world, well, the way to learn, the most common way to learn actually is the hard way.
Correct.
Is the hard way. So here, like, the losses that can really be minimized, while the skills they're getting built up and sharpened for something good. It looks like we don't have any more questions. Okay. Yeah.
Yes.
I would like to thank everybody from my side, Alex from the Trading Pit here. Thank you for joining us. Foti, you.
Thank you, guys.
And hope to see you again,
Of course.
to interact with everybody again. 11th of May, we will update you with emails regarding the next webinar. And the next webinars, as Foti said, we might have like a different pleasant surprise. So have a good night, everyone.
Good night, everyone.
And see you 11th of May. Bye.
Thank you. Bye-bye.